My name is Dr. Ola Brown, and I'm Managing Partner at HealthCap Africa. I'm also a member of the ESCO of Women in Finance, and I am on the Education Committee as well as the Gender Equality Group at Women in Finance. So I'm going to start with giving some remarks about Women in Finance, and then I'll go on to introduce our speaker for the day. So Women in Finance is the premier women organization in Nigeria for women that work in the financial services industry. We've been around for almost 5 years, and our main work is to educate and empower and advocate for women that work in financial services. I was looking at some statistics about women that work in financial services, and surprisingly, Nigeria, in terms of proportion of women actually that work in financial services, actually has quite a high proportion, even compared to Europe and North America. However, when you look at board positions and when you look at management positions, those proportions don't translate through. So advocacy is really important, and I'll be saying a bit more maybe towards the end of the event on some of the work that we're doing on advocacy. Education is really important. So the kind of webinar we're doing now that the Finance Committee organizes under the leadership of our of the lead for the Education Committee, Mrs. Bumi Lawson. We do a lot of we do at least one webinar per quarter that really focuses on key things that women working in financial services need to know. And then we also do a lot of advocacy. So really looking at issues like women on boards, looking at the reasons why women don't get promoted to management level in financial services organizations, looking at how women can be more financially included and financially empowered, and really educating the public about that through white papers and through outreach programs is really central to what we do. It's a membership organization, so I'd like to suggest that anybody that is watching and aligns with those values and is working in the financial services industry, please join us. I'm going to put the details of how you can join and the email address that you can use to express an interest in joining us in the chat below. When the keynote speaker is speaking, I'll make all the details available. It's a great community of women from traditional banking, from microfinance, from, of course, venture capital and private equity, from all walks of financial services. You can find merchant banking, for instance, here as well. So it's a really great community for anybody who has built or is currently building a career in financial services. So last quarter, we had a webinar like this, and it was really describing the economic outlook for the year and really focusing on some of the things that we would expect with our economy. In true Nigerian fashion, they've removed subsidy and the exchange rate has shot up by a huge percentage. So we might need to revisit that economic outlook. But we did, make some good predictions about the economy, and we did suggest that if the subsidy was removed, the level of inflation that might occur because of subsidy removal. So we made some good predictions in the economic outlook, and some of them have come to pass, although, almost 1,000 naira to the dollar wasn't quite predicted. We predicted around 700 to 800, so that was a surprise. But this second webinar, I think, is really, really important, and we apologize that our Q2 webinar is actually coming in a bit into Q3, but it was important that we got the right speaker, and it's important that we found the time that worked for everybody. A lot of women have trouble raising capital. If you look at the venture capital industry, then female founders actually make up 5% or less, depending on the statistics that you look at, of all venture capital funding raised in Africa. And if you look at figures from South America, if you look at figures from Asia, if you look at figures from Europe, they're more or less the same. But Africa's situation is unique because we actually have the highest proportion, or one of the highest proportions, of female entrepreneurs as a percentage of the population in the world. Yet women still find it extraordinarily difficult to raise capital. So that was one of the areas that we wanted to concentrate on for Q2, being able to empower women in any type of business to figure out what it is exactly that they need to put together to enable them to raise capital successfully and grow and scale their businesses. And I'm really, really proud to introduce a friend and also somebody that I personally have invested in her company, and probably almost everybody on the call would have interacted with her products at some point in time. Her name is Affiong Williams, and she is the CEO of Real Fruit. Real Fruit is the leading manufacturer of dried fruits and snacks products in Nigeria. She also has an export business that exports across at least 2 continents that I know, maybe more, and she distributes across the country in Nigeria as well. And I think that she's one of the few women that have raised substantial amounts of funding for her business, and that's enabled her to improve her processes, enables her to hire more staff, and is slowly sort of but surely propelling her towards becoming a $1 billion company. So without further ado, I'd like to introduce our keynote speaker, Affiong Williams, the CEO of Real Fruit, to speak about how to raise capital successfully, like she has, for your business.
Thank you so much. I hope you can hear me. Hi, Ola, can you hear me?
Loud and clear.
Okay, great. Thank you all. I'd like to, firstly, it's great to be here, and I'm really happy to, be able to share my experience with the hopefully budding entrepreneurs in the room, or existing entrepreneurs. I really like to use the time I have to answer very practical questions or give people very practical advice. I'm one who believes that if I can help entrepreneurs with very practical steps in how to move from one place to the next, then I've done as good as I can. So in terms of how you want me to maybe give a bit of history about my company and some sort of the different fundraising quote unquote events that we've, let me know, and I can take it from there. Ola, are you there?
I am, but I didn't catch what you said, sorry.
No, I was asking how you wanted me to begin the conversation, either with
so just to give you some context, all of the people are female entrepreneurs and entrepreneurs. So I think they'd be interested in hearing how you started, because now you look so big. But I think that starting from taking us back to the beginning of sort of how you started the company and what inspired you to start the company. And then one of the things that I would like to know, and I'm sure a lot of the entrepreneurs in the room would like to know, is the personal values that you think are important, and then maybe some of the reasons why you think women are less successful at raising funding, and some of the ways that we can fix it.
Okay, so I'll try to note that, and I maybe keep the conversation to a brief summary of the company, and then obviously give some time to take questions down the line. So as many of you know, my name is Affiong Williams. I'm Affi. I founded Real Fruit 11 years ago, and really wanted to get into entrepreneurship to solve the nagging problem which bothered me, which was actually youth unemployment. So I'm one of those few people who didn't really start to solve a very tangible problem. I mean, youth unemployment is tangible, but I wasn't looking for a healthier snack or something of that nature. I was really looking to get into entrepreneurship to create an industry that would create a lot of jobs for young Nigerians. And that's kind of what led me to agribusiness and to value-added manufacturing. In the same vein, though, I did notice that there was a gap in kind of healthy snacks in Nigeria, and I thought, having lived in South Africa and launched dried fruit, and knowing that dried fruit was such a big industry there, I could kind of be the first to bring it to Nigeria, and I would kind of, get that first mover's advantage. So that was kind of my thinking regarding settling on dried fruit. But ultimately, for me, it was solving two problems. One, value-added manufacturing creates a lot of jobs, and two, I kind of had this twin mission that I would, create a local product that could be, sold on any shelf in the world. So that then it was like, oh, why can't Made in Nigeria sit on any shelf in the world? And really, that was the question I sought to answer with my business. So even in our branding, etc., in the beginning, we were really trying to, emulate a global company, but really focused on being made in Nigeria. So of course, faced a lot of challenges along the way. In the first couple of years, I think our biggest problem was awareness. Launching and pioneering a new product is not easy. And if anybody had told me it would take 6+ years for the product to really become a staple, I would have never believed them. But that's exactly what it took. And in the beginning, we just really focused on getting our products everywhere. People they see us everywhere now, but it has been a decade in the making, building out our own distribution, our own fleet, our own relationships with stores, so that we're able to now have our products in 1,000 stores across Nigeria. Focusing on the particular topic today around fundraising. In the beginning, the first 2 to 3 years, I really leveraged my personal network. And at that time, it actually wasn't much beyond my friends and family. I would even say just my family. I am not from Lagos, I'm from Calabar, so I didn't really grow up in Lagos or have a set network in Lagos. I moved here with my savings and used my savings, and then kind of course, hit up my mother for money and she was giving me money till, basically I needed more money than she was prepared to give me. So I started looking beyond family to sort of invest. And really today, people were really investing in me. So if I want to be
so I think that Affiong has had, okay, she's back, so I don't have to explain. Perfect.
Sorry, I'm back. Apologies, I just got cut off. So I was saying that basically being very vested and committed from day one really showed a lot of people my seriousness. And I mean, it really told, because by the second year, I was able to get people who didn't even really know me that way well to want to invest in the business. And by invest, I was talking raising $10,000, $5,000, $20,000. So these were not significant to me, but really amounts that help me move from. So sorry about that. I have now changed my internet service. Can you hear me and see me?
Yes, we can hear you. We're mostly in Nigeria, so we understand how you have to have like 5 different internets to have one internet.
I hope that won't happen again. Sorry about that. So I think one of the reasons, as I was mentioning, why people struggle to raise money is because structuring a business and professionalizing a business is very, very different from kind of running it day to day and being very informal or casual about it. And in the beginning, that's one thing that I did. Luckily for me, my husband is an entrepreneur, and he really emphasized the idea that even from the first, second year, getting audited accounts and making sure I could.
So, Obina, please note. You now do, and sorry. I want it. I don't want different people doing different.
Okay, sorry. So being able to track what you're doing and track your sales and put all of that down and show a growth story is very important to investors. People think that people will just reward your hard work, and it's more like they would reward what you have recorded to do, not what you say. And I think from an early stage in business, entrepreneurs must build that discipline. It's not fun. It's not nice to have to keep your sales records. It's not It's expensive to get audited statements, but you cannot raise money without auditing your statements. You can't raise money without a track record of what you've done. Can't raise money without, a deck and a trajectory of where you're going, without showing how you've grown. And some of these things are really, really disciplines that are important. And when you start looking at the perspective of what investors want versus what you're doing, you'll also realize that there is a bit of a formula to how you must package. And I don't mean package by lie or oversell your business, but investors want to invest in a growth story. They want to invest in scale. They want to invest in something that is replicable. So if your business does not answer some of those questions, it will be very hard to attract funding. So I always advise people to look at, one, investors who are interested in their sector, in their domain, and what they're looking for, and two, the kinds of businesses that have raised funding and what they are. So if my business was still selling in 100 stores, I would not raise funding. If I did not show that I could go from 100 to 1,000, there's no way any institutional investor would invest in me. If I've not gotten funding from other people outside my friends and family, it'd be difficult for people to believe in me. And that's what also another kind of model I employed in the years. I mean, I'm trying to condense 10, 11 long years in a 10-minute or 20-minute conversation. So forgive me for skipping a lot of steps. But one of the key things I did with respect to fundraising was really focus on milestone funding. I started finding that it was easier to raise $50,000 and $100,000 from different small funds or individuals over trying to raise like $2 million. And what I would do is, instead of tell this big story that I didn't have a track record to support, I mean, my dream was always to own a factory, hire tons of people, work with tons of farmers, but it's really hard to go from 100 stores to that. No investor is going to buy that gap. I started raising smaller amounts from people and showing them basically milestones that I had achieved. So I would say, if you give me $20,000 or 10M or 15 million, I would open 20 new stores, I would sell X more product, I would hire X more people. And those milestones really made it more achievable because people would understand and could wrap their heads around those numbers. And also, they were also happy to support a business where the use of funds was driving growth, versus me saying, well, I need 10 million, but most of it is going to go into one machine and I cannot make sales from that. So again, being very aware of what your funders, whichever kind of funder class you're looking at, wants to see and wants to and what are their own milestones for success is very important to help people with raising funding. So I think breaking down your big vision into smaller goals and raising funding for those goals actually helps you move faster, quicker, because it's much easier, I can tell you, much easier to raise like $50,000 than it is to raise $1 million or $2 million. Because the track record you would need to show and the kind of professionalism, both from your team, your strategy, everything is quite big. And I don't mean this to, daunt people. It can be done, but just being aware that it would take time and it's a process. And most people need to understand what funders want. I can't impress that enough, because I think sometimes we all think that just because we're in business, we kind of should get money to run. And a lot of times that strategic thinking and that, putting our business in paper and following a script really helps you, the entrepreneur, think through how your business is actually going to grow. Think through where your blind spots are, where and how you plan to make money, grow, scale, etc., which sometimes if you're operating in the day-to-day, you don't get to actually consider. So you don't even know if you're building a scalable business or a business that has legs to really, really grow, or what the real challenges are in your market, or who your real competitors are. I think all these things, you must demonstrate a high level of understanding before you can convince an investor to invest. So that process of raising money, keeping records, professionalizing your business, bringing in the right team, learning from others. I think those are all factors that help make raising money successful. And I think that brings me to the next point, which is around the time it takes. I've been running my business for 11 years. And yes, I mean, I could never have guessed that it would take me 10, I think I raised money in my 9th year and I got the money dispersed in my 10th year, which is, I mean, our institutional funding. And if anybody had told me that it would take 10 years to do what I wanted to do, I would have never believed them. And I would have probably never, ever even started. So again, building great companies takes time, and that's something people must be prepared to do. I mean, you hear of the cases where 2-year-old startups raise 20 million, $10 million, 1 million, 2 million, but that's not the norm. Especially for businesses that are not in the tech sector, you do need to establish track record to raise money. And I'm not by any means advocating that it should take 10 years, but for businesses in the real sector, track record matters. Sales, focusing on sales matter, focusing on growth really matters. So I would also advise entrepreneurs and to really look at, have a bias for any activities that grow sales, grow the business, and grow revenues, because that's what investors are looking for. And also give themselves the time. One thing I did in my journey was always learn from others. I did not want to make mistakes that would be very costly or that I know other people may have made and gotten over. And in this market, I think it's a very, very, it's a very unforgiving market. There's such a lack of capital that if you take a wrong step, especially in my industry, if you buy a machine that's too big or too small, you can't sell that and get your money back. It's done. So, learning from others, I think, helps to make you avoid certain mistakes and then give you more runway. Building a team of experienced people, seeking help from similar industries. That's all part of the work of kind of arming yourself and being a more polished entrepreneur to allow you to get to raise funding. I don't think anybody knows more about dried fruit in this country than me, and it's my job to. And I've been able to show that to people. That's why I'm able to raise money, and that's why it's getting easier and easier for me to raise money, because I can demonstrate my not just commitment but my knowledge, and I can even compare with what's happening in different markets to show that I am taking the best steps because I'm considering what other people are doing. So learning from others, building from others, seeking knowledge and seeking information for me is so underrated, and nothing like avoiding. I have several experiences in my career where learning from others have cost me millions, and have saved me millions and millions in naira in mistakes. So I encourage people to do that. Again, there will always be challenges, and things will never go to plan, but I think ultimately if I'm to end my speech, it would be more around kind of understanding the kind of business you're building for the long term. I know a lot of women start businesses. It's kind of either a hobby or a lifestyle business, and then it starts to have potential. Once you decide that, this is a business that you think you want to build, you have to identify that it can scale. Not all businesses can scale. Not all businesses can raise money. Not all businesses have are investment worthy. But if yours is, or if you're determined to make it big, then I think that's where the work begins to start to understand, one, what version of this business can be as big as I need it to? Like what version of this business is the biggest it can get to? Who cares about the business? Are my customers enough? Are there people investing in this domain? Are there people investing in my type of business? Are there even any entrepreneurs ahead of me that have built successful businesses that I can see and lean on, and things like that? You really have to be very intentional about structuring it. It's not luck per se, or it's not there is a science to kind of putting yourself in the best position to raise money. And even then it's very, very difficult. The last thing I would say is networking. I think this is also something I had to learn. I'm not a natural networker. I'm not a natural people's person, but it's something that I had to learn because, getting from people and getting value from people really helps with growing the business. And so networking in terms of going to industry events, reaching out to people who are in my sector in different countries, just building my network of people I could ask for help, advice, mentorship, etc. That has kind of been the invisible hand that has grown my business. And that's not something you can almost replicate. So I would advise people as much as possible to network within their sectors, network within successful business leaders, lean on people who are, passionate and really sell a version of themselves that is the most serious and committed. And I think that really puts you in good stead. So I hope I've been able to give some practical knowledge and tips. I would take any questions. I see some in the chat box, but Dr. Lau, I'll pass it over to you now.
Thank you so much, Affiong. I found that really inspiring, and the same inspiration that I felt when I invested in Real Fruit a few years ago.
Thank you.
And as you were speaking, I just got this quote. I actually tweeted it because I went back to a book that I read ages ago. It's called Greatness: Who Makes History and Why, by Dean Keith Simonton. And he says, making it big is a career. People who wish to do so organize their whole lives around a single enterprise. They must be monomaniacs, even megalomaniacs about their pursuits. They must start early, labor continuously, and never give up the cause. Success is not for the lazy. So as you were talking, I haven't read this book for ages, but I wanted to get that quote because it made me think about what you were saying and sort of resonated with me. Madam Ada is going to take the Q&A, so I'm going to hand over to her now to take the Q&A.
And just while she's doing that, I did want to mention.
Okay, yeah, you're online. Okay, yeah. Sorry.
That especially in today's age of content and social media, people really see the glamour only, and I can't emphasize that a lot. That what people see, success, etc., and it really is a labor. It really is laboring every day. It really is mundane. It's hard. You need a lot of motivation and resilience. So again, sometimes it's very difficult to appreciate what people are doing in the background when all you see is kind of a summarized view of success. So I think that quote is very important for people to really introspect and reflect on, that it's a lot of work and it's a lot of hard, thankless work, but obviously, it's worth it. But it is. Most people are successful because of the work they're putting in, not by chance or luck and things of that nature.
Fantastic. So Ada Ijara is online now, and she's going to be taking the Q&A with Affiong. So I think if you have any questions to ask, you can sort of ask, and then we put it to the audience.
Okay. Thank you very much, Dr. Ola. And hi, Afi. Good afternoon.
Hello.
I've thoroughly enjoyed, your presentation, and it was very obvious that you spoke from the heart. And so well done for all the successes. We've learned today from the quote that Dr. Ola kindly shared now, that success is not for the lazy. And you can pretty much take a masterclass on that, right, at this point. So the first question that we have here is from Josephine Ada. And she says that, how did you manage operational costs at the start of the business, especially doing it professionally from the start? I hope I got that.
Yeah, that's a very good question. I think that in the beginning, there is no, there's really no way to start professionally. I actually don't advise people to start a business hiring so many people, etc., because in the early days, not only are you bootstrapping, you're also learning a lot from the market. So in the beginning, I would advise people, you probably would have to take on more roles than normal. You'd be keeping your own books and doing sales and doing marketing sometimes, and, hire one or two people for production or things like that. If you're manufacturing, you will play several roles. But as the business grows, you certainly need to start and you will know when you need to start kind of bringing in more people who can do more than you, who are more specialized. I wouldn't advise that from day one, but when I mean professionalize your business, I don't necessarily mean hire everybody, but more, there are key tenets of the business you have to do. Get your registration in order. You still shocking to me today how many people do their business and the money's going into their accounts. If that's happening, you have no sales records. As far as anybody's concerned, you're not selling. You're just basically trading on the side. You need to register a company. Your money must go into that company. You must audit that company's records. And those are not, you don't need professional people to do that. It's just a discipline that helps you from day one to imbibe, especially if you want to raise money down the line. Keeping track of your number of stores, keeping track of your sales month on month, not having products in like 5 places and you forgot where they are, you're not collecting them back and you're losing money. They're just certain things that when you start, it just seems go, but there has to be some structure that even you can imbibe that knows that you're moving in direction, because also you can't judge whether you're making progress or not. There's so many people who do business and it's like all they're doing is kind of cycling cash and turning over. They actually may not be growing or selling. And if you don't have any numbers to show you that, then it's very difficult to convince others that this is something with potential. So you don't need to hire a lot of people, but you do need to do something, and you need to formalize your business. And I think that's something that is very helpful to start from as early as possible. I hope I answered.
Okay. Yes, I believe you have. Thank you, Afi. There's another question here, and I want to encourage all the attendees to keep the questions coming. So I have a second question here from Olajumoke Balogun. It's kind of similar to the question that we've already asked, but just for the benefit of those who probably joined back in again. She would like to know, how do you know a business that can scale, especially if you started it as a hobby?
That is an excellent question. I wish there was a formula, but I think that when there's nothing really new under the sun. I mean, even I who did dried fruit in Nigeria, there was no dried fruit when I started. But the reason why I knew we could have a chance was because I looked at things like imported biscuits and more premium snacks, and they were selling. So I thought, okay, if people will buy shortbread and buy all these imported snacks and there's a significant market for them, then there's a significant market for my product. That's really what got me, gave me some. In fact, that's what I used to compare my products with in the beginning. It wasn't like, I was competing against fresh fruit. It was actually other premium snacks. So what I'm trying to say is that there are, if you're starting a business, even as a hobby, there is some market data you can find that will tell you whether there's a lot of businesses in the sector. And if you find a business, you can find out what they're doing right or wrong, why they're growing or what their limitations are, and you improve on them. That's how you kind of get to the next level of scale. But if you are, if you're kind of in a business and there are no markers, you look for the next closest thing. So what are people doing today and how much are they doing it? And if I offered them this opportunity, will they take my service or product? Second thing is also time, right? Again, if you're tracking how you're doing, you will actually be honest about whether you're growing or not. How many more people are taking on your idea? How many more people are finding it valuable? The market will tell you. And then the market also gives you feedback. So I remember when I started, I launched my product with mango and pineapple, and the market absolutely rejected my pineapple. They said, no, we don't want it. And instead, what I started getting was feedback from customers saying, your products are too sweet. Can you kind of mix them not too sweet? And that's how I launched what is one of our most successful products today, our fruit and nut mix. So again, I didn't exactly get a success from day one, but I was able to get enough feedback to know that if you change this, I will buy more. And that's exactly kind of what happened. So you must listen to the market, but you must also do your research. And that goes back to what I said about people you not repeating mistakes of people who have already made them. They made them for your benefit. And you can learn from them. So if you're in a cooking business or something, you have to understand, go and do research as to why these bakeries are busy at only certain times of the day and certain times of the day they're not. And then you can innovate there. It's either they're too big, or you want a mobile bakery, or you want to, deliver to people instead of having your own degree. You know, those kind of things give you insight into where the real opportunity is. People have done, and you most likely will get the same result. So scale, there's not like a one thing that you must know that will tell you it's scaling, but the market will give you feedback. And if you do enough research and you learn from what's existing, you will understand where the opportunity is to scale. I mean, there are no guarantees in entrepreneurship, but you can put yourself in the best possible position. And I think that's where your own learnings come in, and also where you are, again, engaging with the market, keeping your records and knowing that you're growing and being sure.
Okay, fantastic. I think a clear takeaway from what you've said is about, you know, listening to your customers and then listening to your clients, you know, and letting their feedback, you know, guide your next steps, you know. So I think that's an excellent response. Thank you, Afi. We have another question here from Dami Adikoju. I don't know if it's a he or she, but she says that you mentioned how much work it took in the beginning to create brand awareness for your brand and products. How much of your, so the follow-up question basically is, how much of your operational budget did you allocate to marketing of your products, establishing distribution channels in the early stages of your business?
Guys, I really, really appreciate these questions. These are really, really great questions. I'm so glad that you're asking them, because I think these are very practical. In the beginning, I did not invest any money in marketing. And the reason is because in the beginning, sales is marketing. If your products are not in front of customers, your marketing efforts are futile. Let me put it that way. There's no point in marketing your products when they're not available. So we invested a lot in sales and distribution. So what I mean by that is, in the first I didn't even think I launched my Instagram account till like year 5 or 6. It didn't really, I mean, Instagram was still growing, but it didn't really matter because I knew that I sold a lot of my products at the stores. So the best, most effective marketing for my product after people tasting it was seeing it in the store. So I would say that in the beginning, your product must be in front of as many customers as possible. Now, I will give a caveat that you should not have your products spread thin. Like, I always advise people, if they're in a retail sector, focus on one locality or one area or one channel and deepen that channel, because it's cheaper to operate that way than, have one store in Kano, one store in Abuja, 5 stores in Lagos. Doesn't really help. I think you should focus on take a neighborhood, either Surulere, Ikoyi, wherever, and really deepen there, get in all the stores there, be able to optimize there. But generally, being in front of a customer and putting your product in front of where customers can get them conveniently, and I mean conveniently. So even if you're an online business, I would not invest in having a customer experience person who can respond ASAP and log deliveries very quickly, because that will give your customer convenience to buy your product and to reduce the hurdles in them getting them. So I think when you have adequate spread, when you've figured out your distribution and sales to a good amount, then you can start, doing marketing and events. But I find like you see a lot of brands at like pop-ups and things like that, and they're great. But if I can't find you in my normal day-to-day life, I'm not going to remember to call or, look you up, etc. So you're much better off investing in your distribution and sales and improving your basically access for the customer. Then I would overinvest in that and deprioritize traditional marketing till I actually can see that my products are adequately spread. But that's a great question.
Thank you, Afi. I lost towards the end of your response, but I do hope that Dami heard everything you said. And so we have another question here from Irene David Arinze. And so she says that she's from Plus TV Africa, now with Leader Network. She says, I'm running my media organization, and like the speaker said, I'm having to do a lot of the tasks myself, but it gets really daunting managing so many moving parts. What advice do you have with managing these parts and still having to source for funding?
I wish I had an easy answer for you. I mean, in the beginning, I was packing. Sometimes I would even get my husband to like become a factory worker and pack my products for me. So there was a lot of doing a bit of everything in the beginning. I think that again, this is very counterintuitive for startups. This idea of focusing, because it's exciting and there's a lot of opportunity and you want to do a little bit of everything because you don't want to miss out on any opportunity. And I almost believe that in itself brings learning. You learn where to focus and when not to focus. And I think that's what you use that period to do. You have to start saying, no, okay, if I do this, is it really paying off or is it just keeping me busy? Like what metric am I doing to what metric am I using to really judge whether this is valuable or not, right? Because we want to do everything. I mean, in the beginning, I would want to send products even when I made no money. I just wanted to sell. I just wanted to push now. And after a couple of years or a year or two of seeing like, okay, I did this, but what did it really yield me? Nothing. I would now not do that and focus on what was getting me, advancing me, right? So I don't think that there's an easy way to judge whether or not to like do everything, but I think you can now begin to focus on what and be disciplined. It actually takes discipline to say, no, this thing is not going to be valuable, so I'm not going to do it, because your time is limited. And except you have the money to hire people to take on some of those roles, your time is limited. And of course, if you have to source for money, you have to actually put yourself in that mind frame to raise money. So I would say one way you can, besides focusing, one way you can deal with that is say, well, what are the top 3 things I do that grow this business? You focus on that. And if there's any, you can maybe delegate to somebody as a side project, either hiring an intern or a part-time staff or somebody to support and just give you that support, so you're not tying down somebody with the whole salary or increasing your cost that much. Maybe you can do that, but you have to weigh up, is it going to actually push the business forward? And at the same time, are you also focusing on the activities that push the business forward? Because not everything you do, in fact, a lot of what you do in the early days is just going to be kind of trial and error and learning and growing. But at some point you have to now say, okay, this is what is growing my business and that's what I need to put my time and attention to. But yeah, you kind of do have to do everything in the beginning. There's no, except you have deep pockets. But like most of us who start bootstrapping, we learn to kind of be jack of all trades.
Okay, fantastic. Thank you, Afi. I don't see any other questions here, but I have 2 questions for you, if that's okay, while I let the other attendees gather their thoughts and come up with their final questions. So there was something that really resonated with me, Afi, when you were speaking. And you said, at the very early stage, that you basically approached your family and friends for funding, right? Which is typically where most budding entrepreneurs would want to start from. And you said that because you knew they were essentially investing in you, so I just wanted to know, how that went really, as in, because I mean, that's really the thrust of it, right? The people that you go to at that point, your family and friends, are essentially investing in you because they love you, right? But in addition to that, how did you couch your approach? Did you go up to them saying, okay, you want debt or you want equity? How did you couch the approach, basically, in speaking to these intending investors? And then I think my second question would then be, what are the essential do's and don'ts that all of us should consider when we're approaching potential investors in order to ensure a successful funding round? Thank you.
Oh, wow. You guys, I mean, I'm so impressed. I don't know. I mean, I'm more impressed with the questions than I am even with like talking. I'm really excited. These are excellent questions. And I do say that very meaningfully. When I talked about investing in me, I meant that they're investing in you. Basically, they're not investing in the business as such as they are in the individual, right? So it's not what I'm doing. It's that I am demonstrating that I'm serious. It's that I'm committed. It's that they can see my sacrifice. When I started my business, I bought a one-way ticket and moved back to Nigeria. And I'd not lived in Nigeria for about 11 or 12 years. So when I did that, my mom was like, "Oh, you're really going?" And I'm like, "Yes, mom, I'm actually leaving the nest." And I came back. I not really lived here in Lagos. I moved to my cousin's apartment. I was alone, and I was updating her on what I was doing. And so that demonstrated my seriousness, my commitment. You know, I was crying every day on the phone, but I was still going on and like kept working. So, you know, that's what I mean by people investing in you, that, you know, nobody really knew whether dry fruit would work or not. I didn't know, but, you know, people will take a bet on how serious you are, how committed you are, how much dedication you are doing. And then that's really important to show. So I think, and you can't fake that for too long. You know, there are a lot of people who like the allure of, okay, let's package a business together. Let's set up an Instagram. Let's set up this and that. And after a while, you know, they kind of lose excitement because it's gotten hard or it's not what they thought it would be. You know, that's a real easy way for people to judge that you are not serious or not as committed. Because even if some people will never make their money back, they just want to know that they didn't waste it, that they invested it in somebody who was serious and who was committed, right? And so that's why you matter, meaning that your conduct and the seriousness, the level of excitement, the doggedness, the resilience, all that stuff will get more people betting on you than even the idea, really, because nobody knows whether the idea will work. So that's very important. The second question around do's and don'ts. I love this question because I don't want people to waste their time on investing that. I mean, it took me a long time to raise money, and I've raised money from, my investment table has probably like 20 individuals and funds. So I've raised a lot of money from different people. I've even raised money from social media. That's a fun fact. Like people on Twitter I've never met in my life actually gave me money. So, you know, again, and this was primarily because I used to just talk about my business, the challenges, what I went through, and people just believed that I was a serious person. So, you know, again, I just want to encourage you that it's not just that, you know, it's not only just people close to you that can invest in you. People can see how hard you work. In fact, the last person who I started mentoring, she like bombarded me at an event and she was like, "I need these things from you. I need you to help me with ABC." And she has not stopped being resilient and consistent. And so I don't even have a choice. I have to help her because I admire such seriousness and such, you know, commitment. And so these things actually take you very far. But in terms of investment, I think a lot of the mistakes I made, and I alluded to some of them in the beginning, was I didn't do enough research. You know, not everybody is your investor. In fact, very few people are going to invest in you. The odds are very, very slim, but there are people that you should not waste time on. So, and I don't mean that derogatory, meaning that, oh, they're not worth it. I mean it like there are people who, if they've not invested in your geography, or they've never invested in Nigeria, they've never invested in your sector, they've never invested in this, the likelihood of them investing in you is almost zero. So don't go to everybody chasing money. Like they're very, you know, you have to be very specific because it takes a lot of time, and work with the people who are most likely to invest in you. Now, if you identify those people, you should do as much homework as possible. If they're looking for traction and growth, you can't go to them and not have your, you know, any proof of that. If they want to invest in, you know, like gender lens or women businesses or the number of women in your business, if you don't have that, then you can't approach them. If you've not done your homework to approach them, you can't. So understanding what investors need is half the battle of investing, because they have mandates too. And so I think the first do is do your research. You know, find out who has invested in people or companies like you and learn about them and approach them. To network and keep them up to date with what you're doing. So let them know of you and about you. And this is not, you don't have to go and talk about raising money from day one. You can almost, you know, most of these funds have events, or they have things like go and get to know the people, tell them about what you're doing, and you find that it's a lot easier to get them on board with your idea as much as possible. Learn about what they want to see, and so don't spread yourself thin. Don't go to people who would not invest in your category or who are not interested in your sector. Also, you know, be ready. I know that's very difficult to appreciate, but you know, when you're going into investment, like if you don't have the kind of information or level of information investors want. It's very frustrating. Like if they ask you, okay, go back and give me your audited statements for 4 years and you don't have it, the conversation cannot move forward past that. They will not like just say, okay, while you're getting it, let's keep going. They will wait till you get it, right? So knowing what investors want and what they require to invest is very important. Talking to other people and getting feedback around investors, having people recommend you and all of that, that really helps. Any personal kind of endorsement is very, very helpful to make people invest. And if you want to invest from individuals or people you don't know outside your network, you have to show them that you are serious. You have to do the work. It may take time. It may be frustrating. You may pitch 1, 2, 3, 4, 5 times before they take you seriously, but it's just they're the ones with the money and you need it. So you have to kind of, understand what they're looking for. And I think, again, just demonstrating that you are here for the long term and you're committed, it goes a long way. That's a premium in this country because not a lot of people, are committed for the long term. So I think that also puts you ahead. So I do think that's those are some of the things I would say help. And of course, talking to people who have raised money. If you want something, go speak to the people who are successful at doing it, right? That really gives you the insides and outs on how to put yourself in the best foot forward to raise. So those are some of the tips I would give. I hope they've been helpful.
Excellent. Thank you, Afi. A key takeaway for me is stay ready, like the Americans will say, so you don't have to get ready. And so there's a final question here from Engineer Nita before I hand over the reins back to Dr. Ola. Engineer Nita Okonkwo would like to know, how did you manage to build sustainable growth in your business with Forex fluctuations, especially for an import-dependent business? This conversation wouldn't be over without a question on FX, right? Okay, so please have at it, Afi. Thank you.
Yeah, that's a very good question. We basically just, I would say that there's no magic. I didn't do anything specifically different. What the FX challenges did was it really slowed us down. When you have a business and you have assumptions and case, and then all of a sudden your imports, your FX, your naira devalues, it really changes everything and it slows you down. It doesn't end the business per se, it slows you down. There's some businesses where people will not accommodate, price increases, so that's a bit more tricky. But for us, what we noticed was that our customer base could pay, but they would always kind of like, if price increases happen, they would, sales would dip for a while and slow and come back up. When the FX market is crazy, investors pull back a bit and they don't want to invest in, till they see what happens and they see things clear up. So they're just these kind of, there've been tangible and intangible delays. You find that hiring people becomes a bit more difficult, or till the whole market and country adapts, which usually takes anywhere from like 6 to 9 months. It's always this cycle of delay. So it does affect the business. But what it also did was really propel us to domesticate our value chain and our business as much as possible. When I first started my business, I would say maybe I was importing 50% of my raw materials. At this point, it's probably closer to like 10, 15. And by next year, probably close to like 0. And so it has really gotten us to keep that goal in mind and figure out how can we be as efficient or competitive and do stuff cheaper here, because it kind of protects us a little better, not being so exposed to FX risk, right? But yeah, that has been the bane of my existence in terms of building my business. I can't even count how many times we've had devaluations, and I think that's also part of why it's taken so long. Yes, it's not insurmountable. It just is a kind of a delay in the path. Yeah.
Okay, thank you, Afi. Dr. I think at this point I need to take your permission. I have 2 questions left in the chat box. Do you want me to ask them, or do I hand over the reins to you?
Afi, do you have time? Because I know you said that you had to leave.
Yes, if I could just take 2 more questions, and then I do have to log off. Yes.
Okay, all right. Okay, thank you, Afi. We appreciate your time. Dami Adequiju would like to know, do you primarily look for investors who are local or only invest in Nigerian companies, i.e. are more familiar with the business environment here, or do you cast a wider net?
Yes, I would say as much as possible, local investors are best. They understand, telling an international investor, firstly, kind of having to justify US based returns. I won't go into that detail, it's pretty difficult, but also Nigerian investors understand our brand of crazy. So I would say if possible, better. And some challenges are just more familiar and understandable to them versus international. So even if you're even if you're getting international investors, if they have invested in Nigeria adequately and they're still here, they most likely understand some of those risks as well. So yeah, as long as they're investing here or or are local, especially if they're Naira based, I would say that's probably your best bet. Now, if you are now talking about somebody who has invested in Kenya, an international investor, and they've never done Nigeria, I would not. Likelihood of you being the first person to convince them about the market, the industry, the country, the future, it's a lot. So I would say primarily target local, yeah.
Okay, fantastic. And thank you. We have a very last, I don't know if it's a question or a comment, but I just think it's a great way to just, end the conversation. And so Olutoke Ogunkola says, thank you for this, ma'am. I'm in the snail processing sector and I'm seeking investment. My financials are skeletal because sales haven't been great. So if you have any encouraging words for Olutoke, I think that would be a great way to wrap up this conversation. Thank you.
Great. I think that the only way I can encourage you is to keep going. To take a step back and understand why things are slow. It could be market, it could be a number of things. But success is not a linear path. And I can tell you that from my first year, there were times when orders dipped and when I thought, oh, the business is over, nobody likes this product anymore. And I just kept going. But again, I didn't just keep going. I kind of took a step back to understand, well, where else? Maybe I need to target a different type of customer, or maybe I need to do more processing to my product before people buy it, or maybe logistics is the problem. Just sitting down and kind of ironing out where things are wrong or where things could be improved you will find that if you do something about that, you'll see a change in direction. And also, again, talking to people who are ahead. I think we always have this thing where we think people are not just going to give us advice and help, and you'd be surprised at how open people are to helping. So if you know somebody who is advanced or has gone like a couple of years ahead of you in the industry, it would probably be in your interest to talk to them. They will teach you a lot, help you avoid a lot of mistakes, and also perhaps give you some advice on how to, jumpstart your sales again. So, keep going would be my kind of encouragement, and I wish you all the best.
Thank you, Afi. I think we're done with the Q&A. So Dr. Ola, back to you. Thank you.
Thank you so much, Afi, for your time. I know today was difficult to fit in, but thank you very much. I'm sure all the ladies on the call have benefited a lot. I'm really inspired all over again. Just thank you for gracing us. We feel really honored in Women in Finance.
Thank you. I wish everyone, I wish you all well. Thank you so much.
Recharged and re-inspired. So now we're going to move to the closing comments by the head of the Educational Committee for Women in Finance, Madam Bumi Lawson.
Okay,
so
thank you so much. Yes, I hope the speaker hasn't left. Thank you, everyone. I hope you really benefited from this session. One of the objectives of the Women in Finance is really to bring to you real life cases so that you can see that it is possible. And in particular for entrepreneurship, we are particular about that because we do feel that that is the future for Nigeria, especially if we are able to create products that we not only consume locally, but can also export and would then generate foreign revenues. So to just summarize the key points that I really liked was, number one, get family to invest in you. So the first thing is that, who else will believe in you if not family and friends to raise the initial startup capital and including your own savings. Then start to show your products, show your track record. Move from smaller funding to bigger funding. So milestones, start small, link it to your track record, and make sure that you get. So you may have a big final vision, but take those baby steps to show success. Start raising funding gradually, and then eventually you'll be able to get the large institutional investment that you need. As she shared with us, it took her 9 to 10 years to get that large one. Don't give up. Be resilient and focus on the vision on what you're trying to do. Learn from others so that you too can learn from their mistakes, so you don't have to incur those same mistakes that other people have done. But understand and focus on your vision for the long term. That would make you want to go through that journey. So most people, especially women, may start from something that is a hobby to the long-term potential, then scale up gradually, and then make sure that you are doing a business that is investment worthy. Do your research, know who are the funders, who are other competitors that may have done something similar, how are they able to raise funding. Then network. Networking is so important. Network with potential funders, network with industry players, network politically. I know she didn't mention that, but I also feel it's important, because sometimes, especially when you are doing something that aligns with the government's national development strategy, they too may actually send funders your way, highlight your company, and so on and so forth. So make sure that you are out there, advocate and showcase what you are doing, what you are producing, how it benefits not only employment, the nation, and so on, and you would get funding. Don't give up. Those are the key lessons that I took away from what she shared today. And I hope that every one of you benefited from this session. And we look forward to us seeing and having the funding that we want and the vision for our business, especially more female businesses. I know today we didn't restrict it to only females, but I particularly am interested in seeing female entrepreneurs. The area of agri, technology, creative industry, across board, we are very innovative, creative. The thing with most women, sorry about the noise, most women is that scale and vision. They don't want scale. Think big. Now is really the opportunity to really take your business to a large scale. I think with the some of the reforms that have been done, the environment is attractive enough to get foreign investors as well as institutional investors locally to scale up that business. So thank you very much, everyone, for this. And thank you very much to our speaker. I know she has gone, but we appreciate her time. And I especially want to also thank Dr. Ola Brown for pushing the Education Committee to keep to its timeline of having a quarterly webinar. I really appreciate you. Thank you very much. Over to you.
Thank you, everybody, for attending. We'll send the video links. We're going to get the video edited, but we'll send the video links probably towards the end of the week. Remember, join Women in Finance. So one thing that I want to do before we leave is I'm going to post Kuburat's email address, Kuburat Yakubu, who, if you have membership inquiries about how you can join Women in Finance. Obviously, Women in Finance is only for women that work in the financial services sector. But if you are interested, the email, Kuburat's email address is there. So please take it down or screenshot it so you can join us and be involved in some of the other events that we have as well. Take care, everybody. Have a nice afternoon.